Hi, we are going to hopefully try this again. A little bit of technical difficulty, but it is definitely my first time doing a Facebook Live on an interview and having somebody else do a split screen coming in. As soon as David comes in, perfect. Invite friends. Great. Hopefully David will be coming right in. I think we got it this time. It's saying that David can't join the broadcast at this time. Let's see, maybe David is getting his phone set up right now. But I'm really excited to share with you David Toaff. He and I worked on a really great, with a really great client together a little while back, and it was really a wonderful transaction, not only for the two of us, but also for our mutual client as well. He was able to use some really great programs from the DC programs that they were giving, and I just really thought that it would be great to be able to, perfect, I think. So I really wanted to share with you a really great information and details that David really had in terms of lending. I apologize for the slow start, but there he is. Hi, David.
Hey, all right, I think I figured.
How are you?
Great, how about you?
For the slow start. I'm good, thank you. How are you doing? I'm just going to find something to kind of balance the phone here.
Give me 1 second.
Can you look for something? Yeah, David, you have to have your phone horizontal before you kind of came in. How is it right now? Yeah, David, you have to have your phone perfect.
Okay.
Horizontal. Okay, awesome.
Okay.
Perfect. So we are just getting set over here. Bring it closer for me, please.
Okay.
Yeah, I need a taller one. That's why. Okay. How are you, David?
I'm great. How about
I'm great. Thank you so much for taking the time right now. I know the market is really hot, especially right here in the DC market. We have a lot of different things that are going on, and I know that you have a very busy day today. So thank you so much for joining and sharing all of your amazing knowledge and everything that you have shared with me over, over the course of not only working with our client, but also working together on other various things.
Sure, Avisha, I really appreciate it.
Did I just cancel it? But also working together on various things.
Sure, Avisha.
No way. All right, we're back on. So,
okay.
David, can you tell me a little bit more about yourself? I introduced you a little bit earlier that you are licensed in DC, Maryland, Virginia, and Pennsylvania.
That's right. I'm with a company called First Home Mortgage. We don't only work with first-time home buyers, but we do a lot, and we're very familiar, as you mentioned, with all kinds of programs that can get them into a home sooner rather than later. A lot of times there's reduced mortgage insurance or tax credits, different ways to make the home purchase more affordable and make it more of a tax-savvy investment, as you know from the client that we worked with.
Yeah, no, absolutely. So I kind of just wanted to dive in and say, in terms of the lending market, we all hear that the interest rates are going up right now. And how's the voice? Can you go out there and make sure the voice is good? How the market is in terms of, because in the DC, Virginia, and Maryland market, we have a very aggressive market right now. I have a few clients that have put a few different offers and different things in. We have definitely a very great market going on as well. In the Florida market, it's a little bit different. It's all about the products and different things that we have going on. So even if you're not in these markets, we really wanted to share this information for you and to be able to kind of say, maybe you are in Wisconsin or, there's a client or somebody else somewhere else, and this information can be really useful and beneficial for them to maybe get their eyes open to different type of programs that are out there. Because to be honest with you, until you and I spoke, I didn't really have the full scope of all of the really great programs. So thank you so much for sharing your knowledge today.
Sure, and I can just get into it a little bit. The programs are fairly similar for DC, Maryland, and Virginia. So, in the interest of time, I'll just kind of go over them a little. But make a long
Perfect.
story short, I mean, people can buy homes in this area. It gets you into about a $467,000 price point or lower, obviously, with no money down. And that's through various grants or down payment assistance products. Some of these programs, the money is instantly forgiven. It just becomes equity in your house immediately. And you can really refinance as fast as you want. Other ones takes 5 years for the money to be forgiven. So it really depends. There's a lot of options. As I was saying earlier, one of the things that makes them more affordable are federal tax credits you can get with the program. So just like our client did, he got a tax credit that will be good for the life of his loan. That'll save him $2,000 a year on his federal income tax liability. So that was not changed by any of the recent changes from the government, in the tax law. So that's fantastic and very beneficial, because you do, of course, have higher interest rates if you're going to do these zero down programs. Another very beneficial aspect of them is the mortgage insurance, which, for those who don't know, is a cost that you would pay when doing less than 20% down, is cut in half. So normally you'd be paying a lot more in mortgage insurance when you're doing such a low down payment product, especially no money down. With these programs, it's actually cut in half. So that's really, really helpful.
That's amazing.
Yeah.
So it's really a compounded effect. It's not just one thing the client is receiving. They're getting a lot of different benefits from a lot of different aspects of the product.
Exactly. On top of that, you get a 45-day rate lock with no extra points. If for some reason we do have to extend the rate lock, the program, usually, or we usually cover the cost of that. It's really a buyer-friendly opportunity. And as you were saying, the market here is hot. What that means for a lot of our clients, of course, is that getting into a home sooner rather than later is usually the way to go. We're seeing 10, 15, 20% appreciation in a lot of these neighborhoods. So waiting to save up a down payment is often not in their best interest.
Absolutely. So, so technically, if there's two parts to how much cash you need when you're coming to buy a property. One would be the down payment, and then the other part is the closing costs. So you're really taking that big portion off of the table and really helping them to get in, especially in our market here, where it's the DC, Virginia, Maryland area, where rents are really high. So, it's really beneficial.
Definitely, definitely. And when they talk to a CPA and understand all the benefits from a tax perspective, it really becomes clear that it makes sense. Really opened my eyes to how great these programs are when I had a CPA's daughter actually apply with me, and he had looked at all the numbers and figured out that it made a lot of sense for her to take advantage. So yeah, that was awesome.
No, absolutely. Can you let's use that as a hypothetical purchase process. What is the purchase price? What do the numbers look like? And in today's market, with the interest rates that just have really moved up very, very slightly, we are still in such an affordable time right now to be able to purchase property, invest in property, and really grow our net worth through property.
Sure. So, to give you an example, you could do a $400,000 condo purchase. First mortgage could be $388,000, which is 97% of the value of the condo. You could get a 3% assistance loan, as we had mentioned earlier, for $12,000, covering the entire down payment. This is assuming, for example, in DC, if someone earns $136,360 or less, so that's gross yearly income, they would qualify so long as their credit score is 640 plus. You don't need to be a first-time home buyer. As long as you don't own any property at the time the loan closes, you could take advantage of this DC Open Doors product. The interest rate, as I was saying, it is higher. Today would be 5.625 if you were doing zero down on a 30-year fixed. But again, they'd be saving an additional $2,000 a year, dollar for dollar, on their federal income tax liability. So, for example, if your client didn't owe money to the federal government and they also weren't getting money back, they would get $2,000 back, which of course is really, really helpful. Again, the mortgage insurance would be cut in half. So for example, if they have excellent credit, it'd be about $106 a month in this type of scenario, which, normally you'd be looking at something double that without this affordable loan program. It'd be about $106.
So this is really excellent, especially for, you know, you can buy a lot of different properties in the DC, Maryland, Virginia area for that price point. It's not even an entry price point. You can get a beautiful 2 or 3 bedroom home or even a condo. So this is really great, helpful information. And the DC's Open Doors program is really something valuable to kind of be able to sit down and say, okay, maybe this is a great time to move forward with that purchase.
Exactly. And, you know, in Virginia and Maryland, again, as I was saying, they have similar programs. You know, in the interest of time, I won't get into all the details, but what I do want to, sure. I know you do quite a bit of business in Virginia. VHDA, which is their version, so to speak, of this program, is actually more affordable than DC or Maryland's. Their rates are actually lower. Their costs are really low, and the tax credit, instead of paying the normal $900, the fees are entirely waived. So you're getting a free tax credit in Virginia. Yeah, it's tremendous. Another thing that I want to mention is that all of these programs, well, DC, Virginia, I should say, the ones I just mentioned, can be closed in 30 days or even a few days less than that, which is really awesome. You know, a lot of other programs take quite a while to close. In Maryland, you might be looking at more like 35 to 40 days, but still, as I know you know, a lot of programs really take quite a while to close. So these are still widely respected, well-funded loan programs. They've not run out of funding since they've started. And a lot of listing agents respect and understand the program. So as you know, from our transaction, it's not too hard to get a client into the door with one of these products.
No, it was very seamless and it was very quick, and that didn't hinder our situation whatsoever because the property that we were buying for our mutual client, they had several offers. So coming in with that DC Open program was a great situation. It kind of seamlessly moved forward, and that's really exciting to know as well that if the client does want to move forward and they are actively looking, they're not going to have to all of a sudden, if their rent, let's say, ends in a month or two, that they don't have that question mark of time. Will they be able to make it? Will it be able to happen?
Exactly. And I would say it's probably important using a lender that only has local experienced appraisers. You can imagine if they're bringing someone who doesn't know the area and the appraisal comes in significantly low, if they're doing a zero down program, that could be problematic. But as long as the appraisers are local and experienced, you know, things usually run really smoothly with these products.
Sure, absolutely. And I think you mentioned a really great topic about your credit score. It's really interesting how you and I were talking about another client that needed to kind of tweak some things on their credit. And, you know, if anybody has a credit issue or is looking to kind of increase their credit score to do some work, we actually have a mutual person that we work with that does some really great. It was really funny because I'm like, David, I have such a great credit guy. And David's like, no, I have such a great credit guy. I'm like, well, if your guy is so great, why don't you share his information? And we ended up sending an intro email, and I'm like, oh, we always knew the same guy. So that was really great as well. So if anybody does need credit repair or thinks that they want to purchase a property and they feel like that might not be in their cards for them because their credit score might not be where it needs to be, that's something that we can do our due diligence. And there are really great credit repair people out there. If anybody has any questions, please feel free to reach out to me on Facebook, private messenger, or just even messaging below. Also David as well. You are an arsenal of information that really is so helpful to kind of, you know, because sometimes, especially if it's your first time purchasing a home, or maybe you haven't purchased a home in a very long time, it seems like a very confusing process. But, you know, having a lender that really breaks it down for you and is able to work for you and on your benefit is really a priceless asset.
Thank you, Avisha. I appreciate that. And likewise, you know, I think these buyers working with a realtor that was obviously aware of negotiations and able to get them in despite multiple offers was extremely helpful. I mean, of course, that makes an enormous difference. And just a quick note about the credit, you know, we happen to work with someone who's fantastic, but I can't tell you how many people I meet get stuck with awful credit repair companies that are nothing more than a scam. They'll drag them out for a year, even 2 years, charging them, you know, a couple grand or more and doing very
wow.
So the other thing that I see a lot of people doing is they immediately assume that paying off all these past due accounts is going to improve their credit. That is absolutely not the case. So I think, you know, the takeaway from this is that they really need to talk to a loan officer or to you or to someone who's aware of the way to handle such matters and not just think that they got to go pay off all these derogatory accounts. In some cases, that can actually hurt your credit score. So it's not
right. I absolutely agree with you. And I actually saw, I believe, a post that you made about a client of yours that you were working with. And, you know, at the end of the day, knowledge is key and knowledge is power. And let's say you and your family or somebody is looking to purchase a property a year or even 2 years down the road, having that conversation with the realtor or the agent or the lender all the way even a year or two before is really an excellent way to go, because knowledge is key. And making those different decisions over the next course or year or two will put you in the best position that you can to get the lowest rate and to be able to be in the most strategic, positive situation to have that loan work for you.
Exactly. And there's no obligation to talk to a lender. Getting pre-approved still doesn't obligate you to the lender. But as you were saying, it enables you to get yourself in a prime position. And, you know, a lot of times there's a with now that had a $35 medical collection. This is someone who has otherwise immaculate credit, you know, good income, you know, plenty of down payment, et cetera, et cetera. And that $35 little item knocked his score down 60 points. So,
wow. So what did you guys do to get that fixed, and how long did that take?
He already found the property he wanted. So we really didn't have room to do that. Otherwise, we would have had him work with our guy. Probably would have taken 30 days and he would have been good to go. So, I mean, it's all about talking to a lender sooner rather than later, not waiting until you find the property.
Right. Absolutely. So just talking about the market overall in general, in terms of lending, where are rates about right now, and how are things looking? And, you know, what is your feeling about that?
Sure. So rates are around 4.375 to 4.5 now for 30-year fixed products.
Wow. That's amazing.
Yeah, they're still pretty good. Jumbo, you know, you normally see a little bit lower. The jumbo market is so aggressive. So, you know, on those loan amounts above 679, 650 in this area, it'll be more around 4.375. Of course, you could pay points to buy down the rate. I don't know that that necessarily makes sense. As you had mentioned earlier, you know, people are expecting rates to go up. Nobody can say for certain, but inflationary expectations are rather high. So that is the general consensus. And as a result, the market is totally red hot. One of the things we're doing is getting underwriting done ahead of time. I actually have a deal now, 13 days. So, you know, that's ways we're positioning people to look more.
I appreciate that, and I love that.
Yeah, and you know, the buyers do too, because in these situations with 8, 10 plus offers, you know, you really need to stand out. So yeah, and you know, the buyers do.
Sure, absolutely. So in terms of the lending process, if there was somebody that wanted to see if they qualified or what it would look like to possibly purchase a home, and what would be the suggestion that you give for the next steps?
So working on pre-approval, and of course I can email them over that information. I'm glad to talk to them first so they can understand their options. I would look at all the funds that they have and figure out how much of a down payment, you know, makes sense. If they don't have 3% to put down for a more normal conventional loan, to delve into these zero down products and figuring out, you know, depending on what neighborhoods they're interested in, does it make sense? So I say that because so many of my clients who have used the zero down programs have bought in areas that have appreciated so rapidly. They found an opportunity to refinance into a much lower rate pretty quickly. So sure, we're in a rising rate environment, but you know, sooner or later, it seems inevitable that they should come back down. You know, I don't know when, you don't know when, but it seems like historically they come back down eventually. So the point is getting into that property that's going to see major appreciation sooner rather than later is really the name of the game here. So that's one other thing I want to drive home.
Right, absolutely. And, you know, time is of essence. And what that means for me and my clients is that we just had a scenario that a client has been looking at property for like 2 years now. They've had it in their mind that they wanted to purchase. They also had reached out to a lender to see what that number would be for them to purchase. So she has fallen in love with a few different houses in the $800,000 marker. But that's a few months ago when the rates were lower. And if you could help explain, and I think you know where I'm going with this is, you know, she's in that 800 price point, but now that the market has and the interest rates have just moved a little bit, her buying power and how much money the bank is going to give her reduces. So that has actually impacted where she thought she was going to be able to purchase, and she's a little bit devastated over that. And can you share what that means and how we can help our clients to kind of know that if as the rates go up, it's kind of better right now to look at these type of rates to be able to get locked in?
Sure. So, the economy overall is moving along pretty well, and that's why are forecasted to go higher. Typically with positive economic news, we see interest rates get worse, and that's what's expected. That's what we've already seen. We have seen rates go up about 0.5% over the past 4 months or so. So as a result of that, your buyer, particularly in that larger loan amount, is going to be paying more. What that looks like is your monthly payments higher, so your debt to income ratio is of course higher, and then us as a lender can only lend so much. I mean, a lot of times it's also just a matter of affordability and what the buyer feels comfortable with. So as you were saying, it's really a reason to consider expediting this process. But what people can do is really look at their debts and see what they might be able to refinance. A lot of times people are not aware of how simple that is. If they have student loans, if they have a car note, possibly personal loans, there's really, really competitive rates out there for those types of loans. And I think it's important for people to explore all those options and see what can be done. Another thing is a lot of people don't realize that as a first-time home buyer, up to $10,000 can be borrowed against your 401k with no tax penalty. A lot of times that helps get you to where you need to be sooner rather than later. And another thing, just as far as like being competitive, how to get into home. Sorry about that. I had to block a call. So
no
one more
worries.
thing. One more thing that you have to consider doing, in my opinion, is really having the lender get your commitment done ahead of time. So, if people want to cooperate with us and continue on with the loan process before they even have a contract, we can get their commitment in advance. That's how we're doing this, 13-day closing now. Not just doing a 13-day closing, but not in a stressful way either. So, it really benefits, all parties on the buyer side. And again, if that means getting into a house before rates go up or before there's more appreciation, obviously that's a home run for them. All parties on the buyer.
Absolutely. So I know that you have a lot of paperwork and different things to do, and you have a lot of things going on. Is there anything else that you wanted to share in terms of lending and some different information or different things of how someone can get started?
Sure. So if people want to check out my website, it's just my first and last name.com, David, T as in Tom, OAFF as in Frank.com. Go on there and just click get started under the purchase link. It's pretty intuitive. If people want to reach out to me and chat first, my cell is 610-348-3772. And I'm glad to go over spreadsheets with people before they necessarily want to get pre-approved, but they just want to see some numbers. Maybe they can chat with you, look at a property or just look at it online and get a feel for what it would look like with maybe 3 or 5% down, for example. We can very easily get those figures together before they do a pre-approval.
Great. And your process is very seamless, really easy. So I appreciate that. And I know all of my clients and all of my future clients will appreciate that as well.
Thanks a lot, Avisha. I really appreciate you taking the time to do this with me and having me over here. I know you're back and forth from Virginia, DC, Florida. You're really all over the place. So thanks for taking the time to have me here.
Absolutely. But next time we do this, I am going to ask you to show us some of those amazing dance moves that you do have.
All right. We can try a little breakdancing next time. Might have to take off the jacket, but I'll.
That's awesome. I love it. Thank you so much. And if you could actually post your information on the comments below in the blog, and then that way everybody has your information and link and it'll be up there. So if anybody wants to reach out, if anybody would like any more information from me, feel free to private message me or email me at any time. Our Facebook page is with Sorelli Realty, and we're really here at any time to give any help.
Sounds great. Will do. And have a great rest of the day.
You too. Thanks, David. Bye.
Take care. Bye.
And we're really here.